So talking about delta, delta is the change in an option premium due to a change in the price of the underlying assets. For example, if the Nifty index moves by 50 rupees and the option moves by 25, that means this strike has delta of 0.5, because delta is equal to the change in underlying assets divided by the change in option premium, and here premium changed by 25 divided by 50, so we are getting the 0.5 delta. The maximum delta can be 1 because an index has a delta of 1. Call options have a positive delta, while we need to keep in mind that put options have a negative delta. On the basis of delta, we can predict changes in option prices. For instance, if the market moves by 50 rupees and the delta of a particular put is 0.4, that means the premium change will be around 20 rupees, because 50 rupees is the underlying movement, delta is 0.4, so 20 rupees will be the premium in the options. We also need to note that sum of the absolute value of the put and call delta for any strike will be always equal to 1. So let's say for a strike, call delta is 0.53. So in that scenario, put delta will be 0.47, or if the call delta is 0.63, put delta will be negative 0.37. So if we ignore the plus and minus symbol, the call and put delta combined will be 1. This also works as a put call parity. So if you want to hedge your position using options, delta helps to calculate how much you need to buy or sell to stay balanced. Let's say you have 100 shares of a stock and call option has a delta of 0.5. That means we need 2 options to hedge, because 2 into 0.5, that will be 1 delta. So all the delta hedger, they calculate the delta position of their existing portfolio, and accordingly they keep on hedging the position as per the market movement. So I'm just taking one simple example. Let's say Nifty is trading at 22,000 and we are taking 22,000 strike, which is delta of 0.5, with the view that it's at the money call, and let's assume the price is 100 rupees. If now index moves by 1 point from 22,000 to 22,001, option premium will increase by 0.5 because delta is 0.5. If Nifty falls from 22,000 to 22,999, underlying has declined by 1 rupee, so your option will decrease by 0.5. Let's say the market jumps by 50 rupees. Nifty moves from 22,000 to 2250 and delta is 0.5, so your option will increase by 25. We need to keep in mind that we are looking this example with the view that there is no change in the gamma, theta or any other option Greeks. We are only talking about the delta here. So if your option was priced at 100, it will become 125 if underlying moves by 50 rupees, and that has the delta of 0.5. So that's delta in action. Every 1 rupee move in the index lead to 0.5 rupees move in options, because delta is 0.5. We need to keep in mind that at the money options usually have delta near 0.45 to 0.55, and as you go in the money, delta will go towards 1 in call side or put side. As we go towards the out of the money, delta will go towards 0. So this is what you need to keep in mind. Delta plays an important role for the change in the option premium. If you know the delta, you can understand or predict the change in option premium due to the change in underlying. But we need to keep other factors in mind like gamma, theta, vega and rho. And you can see all these delta figure in our Rise app mentioned here in this picture.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.